We will also show the real impact of the changes in Nigeria's key macroeconomic indicators in the last 12 months to June 2012. After this, we will present the results of the economic scorecard, beginning with a summary of positive economic performance, which acknowledges areas where the economy has improved and has scored higher in this review period compared to a year ago. We will then present the aggregate scorecard for Nigeria, after which we will highlight certain areas of negative economic performance, that is, areas with lower scores compared to same period a year ago. In the Nigeria 2020 section, we benchmark Nigeria against the 20th largest economy by 2020 and draw certain implications for economic growth and the actual size of the economy, amongst other things. Lastly, we conclude this presentation with a graphical analysis of why Nigeria needs to diversify its economy. The underlying philosophy of the scorecard was aptly described in my foreword to the 16th Nigerian Economic Summit in 2010 as follows, and I quote, "In recent years, we have taken steps to rethink our engagement strategy with stakeholders, especially government, with a view to improve our advocacy impact. This effort culminated in the adoption of scorecards in 2009 for benchmarking progress made in our economic development efforts since Nigeria's return to democracy. The scorecards will be updated annually in order to hold stakeholders accountable and on an ongoing basis in our march towards Nigeria Vision 2020. End of quote. This scorecard seeks to engage stakeholders in a discussion on the assessment of Nigeria's efforts towards economic development in order to identify areas of positive performance to leverage on and also areas of negative performance that are in need of improvement. The high-level framework of the scorecard can be described as the assessment of Nigeria's actual economic performance versus targets between June 2011 and June 2012, considering 12 domains to determine an aggregate score on a scale of 1 being the lowest to 10 being the highest. For the purpose of our analysis, we define our review period as the 12 months leading to June 2012. As such, economic performance is analyzed on a last 12 months basis, not on an annual basis. This allows us appropriately track, amongst other things, the adoption of recommendations at the end of a Nigerian Economic Summit event like this, and assess how it has impacted economic performance by the time of the next summit event. In arriving at the results of this scorecard, we have altogether analyzed 12 domains, 83 policy trusts, and 132 key performance indicators. The 12 domains are as follows: macroeconomic environment, the real sector, human capital development, financial capital, infrastructure, science and technology, including information communication technology, political governance, public sector governance, corporate governance, institutional effectiveness, ease of doing business, and environmental targets. Some of the key policy documents and global ranking reports used in this scorecard analysis include Nigerian Vision 2020 First Implementation Plan 2010 to 2013, the Federal Government Budgets 2010 to 2012, the Federal Government Quarterly Budget Implementation Reports 2010 to 2012, the World Economic Forum Global Competitiveness Report 2012 to 2013, the World Bank IFC Doing Business Report 2013. Other credible local and international economic data sources were also used in this scorecard, including the National Bureau of Statistics, the Central Bank of Nigeria, the Budget Office of the Federation, the Ministry of Finance, the Economist Intelligence Unit, the International Monetary Fund, and the World Bank. We now present the global context and domestic realities of the economy. According to the 2012-2013 Global Competitiveness Report, GCR, Nigeria ranks as the 115th out of 144 countries in terms of competitiveness. We note that this is an improvement from the last 2 years when Nigeria was twice ranked 127th. Despite this improvement, Nigeria has in all 3 years remained at the bottom 20% rank of countries surveyed. Our competitive strength is our large market size, which has earned it a rank of 33rd, improving from 34th in the last year's report. Other significant improvements in ranks were seen in macroeconomic environment, which improved from 121 to 39th position. Labor market efficiency, which improved from 70th to 55th. And financial development, which improved from 84th to 68th. If we compare Nigeria's competitiveness ranking with other emerging economies, especially the so-called next 11 economies of Bangladesh, Egypt, Indonesia, Iran, Mexico, Pakistan, Philippines, South Korea, Turkey, Vietnam, and Nigeria inclusive, the country would rank as 9th, only higher than Bangladesh and Pakistan in 10th and 11th positions respectively. Furthermore, if we compare with the BRICS nations of Brazil, Russia, India, China, and South Africa, of which Nigeria is increasingly being conceived as a viable 6th member to form BRICS, then Nigeria will rank as bottom of the group in terms of competitiveness. This is the comparative status of the Nigerian economy in the context of global competitiveness. This table of key economic indicators summarizes the changes in some of our macroeconomic indicators over the last 12 months to June 2012, as well as the realities of their respective economic impact, whether positive or negative. In the last 12 months to June 2012, Nigeria has witnessed positive economic realities such as the decline in the 12-month average inflation rate from 12.34% to 11.29% on account of sustained monetary policy tightening by the Central Bank of Nigeria. The increase in the country's external reserves from US dollars 31.89 billion to US dollars 36.72 billion, representing a 15.15% rise, driven mostly by international oil prices, which rose by 17.04% over the same period. Also, the reality of the Sovereign Wealth Fund initiative, with a seed capital of $1 billion in the last 12 months, has had a positive impact on the economy, particularly in the area of sovereign credit ratings. The reduction in the actual fiscal deficit to GDP ratio from 4.02% to 3.16%, as the government targets a deficit to GDP ratio that is below the 3% fiscal rule. On the other hand, Nigeria has also witnessed some negative economic realities, such as the decline in the real GDP growth from 7.78% to 7.03%, which meant that the economy decelerated for the 7th quarter in a row since the 1st quarter of 2011. Yet this growth still ranks as one of the fastest in a weak global environment. The decline in agricultural sector growth from 5.90% to 4.98% as security and weather challenges continue to stifle activities in major agricultural zones of the country. The negative growth in the oil sector from 2.72% to negative 0.34% as pipeline vandalism, leakages, as well as stalled investments due to the non-passage of the Petroleum Industry Bill impacted negatively on oil output. The flat growth in the manufacturing sector from 7.56% to 7.55%, but this was not altogether negative, as we observed some strong underlying growth within the sector, particularly in the cement subsector, which has witnessed a robust 10.82% growth in the last 12 months to June 2012. The sharp increase in the monetary policy rate from 8% to 12%, again due to the CBN's hiking of the MPR 3 times in the 12 months to June 2012. The rise in the maximum lending rate from 22.02% to 23.44%, which has discouraged real sector borrowing for production. The depreciation of the naira from 149.91 naira to 154.39 naira to the dollar, as speculation and liquidity pressures on the naira forced the CBN to review its target midpoint from 150 naira plus or minus 3% to 155 naira plus or minus 3% in November of 2011.